Hello, everyone, and welcome back to Iraqi Dinar News, the channel that keeps you fully informed and financially prepared for every important update that unfolds within the world of IQD investment. Today, we are diving into one of the most anticipated and highly discussed topics in the community. Imagine waking up one morning in 2025 to find out the Iraqi dinar has officially increased in value. Imagine that the revaluation moment everyone has been waiting for has finally arrived now. The real question becomes, how will Chase Bank, one of the most powerful financial institutions in the United States, handle Iraqi dinar exchanges? What rules might they follow? Will there be daily limits, verification steps, or differences in exchange rates depending on customer status? In this full guide, we will walk you through what may happen, how to prepare, and how you can be ready before the crowds rush in. This is not just another hype video. This is real strategy based on banking logic and compliance standards that exist right now. So watch this video carefully until the end, because the people who prepare early will always be the ones who benefit the most when opportunity arrives. Let's begin this deep dive into how Chase might structure IQD exchanges when the revaluation becomes a reality. The first point we must understand is that Chase Bank, like all major U.S. banks, cannot take official actions until a global rate change becomes recognized and legalized worldwide. Right now, in 2025, the RV remains a possibility, not a guarantee. But major banks do not wait until the last second to prepare. They quietly build internal procedures behind closed doors so that when a foreign currency gains value, everything is already in place to serve customers without chaos. Now, if the Iraqi dinar suddenly jumps in value, millions of currency holders will rush to banks immediately. This creates a real challenge because banks are not designed for massive instant redemptions. That is why many experts believe Chase will use daily exchange limits, or what some call exchange caps, to control the flow of transactions. These limits could help prevent liquidity shortages and make sure everyone gets fair access instead of a first-come, first-served scenario where only a few lucky people get in early. The goal would be to maintain stability while delivering safe and organized service. Investors must remember this is not about blocking people. This is about protecting the entire financial system during a major moment of change. If you are holding IQD, knowing this ahead of time puts you at a huge advantage. Another major factor that Chase Bank will pay close attention to is compliance. In the United States, every foreign currency exchange must follow KYC, Know Your Customer, and AML, anti-money laundering rules. These laws exist to protect against fraud, counterfeiting, illegal funds, and tax evasion. So Chase is likely going to require every dinar holder to provide proof of purchase or proof of legal possession. This means keeping receipts from where you bought your IQD, certificates of authenticity if you received them, and any documents showing where the funds originally came from. Some people are holding dinar they purchased over 10 years ago and have lost the paperwork. If that is your situation, you need to prepare now because without documentation, banks can legally delay or even refuse the exchange. They will also require government-issued ID and may ask additional questions if someone tries to exchange a large amount at once. These steps protect the banking system and help prevent criminals from using the event as an opportunity to move illegal funds. So yes, preparation matters more than ever before. Another important point that Iraqi dinar holders must recognize is that different customers may not be treated equally during the early stages of an exchange event. Chase Bank uses tiered banking, meaning customers with higher account balances, business relationships, or private banking status typically receive faster service and higher transaction limits. This is not favoritism. This is standard banking practice worldwide. So if a revaluation occurs, Chase will likely prioritize customers who have established accounts and long-term banking history. They may provide them with scheduling options, larger daily exchanges, or access to special foreign currency desks. New customers, or those who walk in with no prior relationship, may face longer waiting periods, lower caps, and stricter verification reviews. This means one of the smartest steps an investor can take right now in 2025 is to open or maintain an active account at Chase Bank and keep it in good standing. Even a simple checking account could help you be processed sooner. The bank will always trust customers they already know more than someone who suddenly shows up with currency worth tens or hundreds of thousands of dollars. So building a connection now is like placing yourself in the fast lane before the traffic jam even begins. And remember, this is not guaranteed financial advice, just logical preparation. So let's also talk about how exchanges might actually be processed. When people bring in their IQD, some dinar holders imagine walking into a bank, dropping bills on a counter, and walking out with cash, but that is not realistic. Chase will not be handing out large stacks of physical dollars instantly. Instead, exchanges would be electronically credited into your bank account, giving the bank time to verify authenticity and clear funds through proper channels. The bank may use scanning systems, serial number checks, and automated verification tools to confirm that the dinar is official and not counterfeit. If the exchange amount is large, the money might be placed on a temporary hold while compliance reviews are completed. This does not mean the funds are frozen. They are simply being confirmed legally. Cash withdrawals will almost certainly be limited at first to protect bank liquidity. For example, you might exchange the currency one day, but be allowed to withdraw only a controlled amount in cash per day or per week, while the rest remains safely in your account. This may seem restrictive, but remember, a stable banking system benefits everyone more than fast chaos. Patience and planning will be the key to success. Liquidity management is another important reason banks may implement daily caps. If the dinar suddenly rises in value, potentially turning small purchases into life-changing wealth, millions of dollars could be entering the financial system from unexpected sources. Banks must balance how much physical cash they keep, how much they can order from the Federal Reserve, and how much electronic liquidity they can move instantly. A rapid shock in one direction could cause shortages. So Chase Bank would work to prevent any panic or imbalance by controlling the flow of funds. Temporary restrictions are a tool used worldwide during high-value financial shifts. The goal is not to deny access. The goal is to ensure safe, secure, and steady processing so customers are protected throughout the entire event. People who expect instant, huge withdrawals may feel disappointed, but those who understand financial systems know this is a normal part of maintaining stability. And none of these details are official Chase announcements. They are logical scenarios based on how regulated banks are required to operate. Something else to keep in mind is that Chase Bank operates under the strict supervision of U.S. regulators, including laws enforced to prevent illegal financial activity. When the RV conversation becomes real, the government will become involved very quickly. High-value currency exchanges often trigger automatic IRS reporting, meaning tax responsibilities may apply in the future depending on laws and profit classification. While tax advisors will have the final say, investors should prepare now by keeping complete documentation of every dinar purchase dates, amounts, payment sources, and any related fees. If the U.S. government asks for proof and a person cannot provide it, the bank may have no choice but to delay processing until they verify the legitimacy of the transactions. And this is where the difference between prepared and unprepared investors becomes massive. Those who have organized records will walk into the bank confidently. Those who ignored warnings may face long waiting periods, and frustrating investigations. You want to be in the first group, not the second. Now, let's take a closer look at how verification procedures may unfold during an Iraqi dinar exchange at Chase Bank. Verification will almost certainly be rigorous and multi-step. This is not to intimidate investors, but to ensure the integrity of the process and compliance with U.S. financial regulations. Customers may be asked to show original receipts of purchase, proof of ownership, certificates of authenticity if applicable, and valid government-issued identification. Banks like Chase might also review prior transaction history to confirm that the dinar holdings were legally acquired. In addition, if a client intends to exchange large volumes, additional documentation could be requested, such as statements verifying the source of funds or even tax documentation. All of these measures are part of KYC and AML compliance standards, which aim to prevent illegal activity, including money laundering or the use of counterfeit currency. From an operational standpoint, this verification process can take time, especially during the initial stages of a revaluation event, when millions of dinar holders may simultaneously seek exchanges. Preparation is key. Those who organize their documentation and keep clear, verifiable records are likely to experience smoother, faster transactions, while those who delay may face extended waiting periods, additional questions, and even temporary restrictions on processing. Understanding the verification requirements now allows investors to plan in advance and reduce the likelihood of disruption when the event occurs. In addition to verification, Chase Bank may implement a phased rollout for the exchange of IQD. This is a standard approach during large-scale foreign currency events and serves to reduce operational stress on the institution. High net worth clients or those with long-standing banking relationships could be given priority access during the first phase, allowing the bank to test systems, ensure compliance, and manage liquidity before opening the service to the general public. Following this, a wider rollout may occur for standard retail banking customers, with gradual expansion depending on system capacity and demand. Phased rollouts also give banks the opportunity to adjust policies limits and procedures based on real-time operational feedback. For dinar holders, understanding the likelihood of a phased approach is crucial because it sets realistic expectations. Those who attempt to exchange without preparation may encounter long lines, limited service windows, and delayed processing. By contrast, early preparation, active communication with bank representatives, and complete documentation could allow an investor to participate in earlier phases or access larger exchange limits. This strategy is not just about gaining ease. It's about positioning oneself within the banking system to avoid unnecessary delays and reduce stress during what is likely to be a high-traffic event. Another factor to consider is the potential impact of daily exchange caps on individual investors. If the Iraqi dinar undergoes a sudden increase in value, banks may impose temporary limits on how much currency can be exchanged per customer each day. These caps are not arbitrary. They are designed to maintain orderly financial operations, prevent liquidity shortages, and ensure a fair distribution of resources. For investors, understanding these limits is critical for financial planning. Large-scale dinar holders might need to structure exchanges over several days or weeks to avoid hitting the cap and to ensure compliance with banking procedures. Daily limits may vary based on account type, relationship with the bank, and tier status. For instance, private banking clients might be permitted to exchange higher amounts daily than standard retail clients. Being aware of potential caps allows investors to develop a realistic strategy, plan staggered transactions, and coordinate with financial advisors to optimize outcomes. This emphasizes the importance of proactive communication with bank representatives as those who inquire early may gain better clarity on possible limits and procedures, positioning themselves for a smoother overall experience when the exchange becomes available. Chase Bank's operational capacity will also influence how quickly exchanges can be completed. Major institutions have vast systems and resources, but they are still bound by regulatory frameworks and physical limitations. Large influxes of IQD could create temporary backlogs, system processing delays, or heightened verification steps, especially if millions of holders attempt simultaneous exchanges. Banks typically respond by triaging requests, giving priority based on account status, transaction history, and relationship level. In some cases, technology solutions such as electronic scanning, automated validation, and batch processing of currency may be employed to expedite verification. However, human oversight remains critical to ensure compliance and prevent fraud. Investors should anticipate that even with a highly efficient system, initial exchanges might require patience. By preparing ahead, maintaining active accounts, keeping documentation organized, and understanding possible daily limits, IQD holders can navigate the process with confidence and reduce the likelihood of operational bottlenecks affecting their transactions. Those who ignore these considerations risk encountering delays that could have been avoided through strategic planning. Liquidity management is not only an operational concern but also a key factor for overall market stability. If the dinar appreciates significantly, banks like Chase must carefully balance the volume of cash they hold against electronic credits and reserves available through central banking systems. Sudden withdrawals of large sums could place pressure on the bank's cash reserves, potentially impacting other customers or branches. This is why temporary restrictions on immediate cash withdrawals are highly likely. Funds may still be credited electronically, giving customers access through transfers, debit cards, or digital wallets, while large physical withdrawals may be limited initially. Such measures are not designed to penalize investors, but to ensure that the financial system remains functional, secure, and orderly during a period of potentially unprecedented activity. From a strategic perspective, understanding the difference between electronic access and cash withdrawal is crucial. Investors may need to plan post-exchange finances accordingly, considering digital transfers, investment opportunities, and structured withdrawals to manage liquidity effectively. The key takeaway is that preparation, knowledge, and strategic planning are essential for navigating a high-volume, high-value financial event successfully.